NVIDIA stock is about to break out. Number one, NVIDIA is trading at its 52-week high. NVIDIA has returned over 178% year to date. So if you invested early this year, you are up handsomely. The valuation of NVIDIA is at 48 times future earnings. And on top of it, NVIDIA's Blackwell chips has been sold out for the next 12 months. In addition, NVIDIA's Blackwell chips will be delayed till early 2025 for Amazon. So with all that backdrop news in mind, why is NVIDIA stock about to break out? Well, in today's video, I will do a technical analysis and I'll show you what is transpiring on the technical chart. And I will share with you 3 trade ideas. 2 trades are established and the third trade, which is going to be the breakout trade, is currently in progress, and there are certain things that you need to keep in mind before you take that trade on. So if you enjoyed today's video, make sure to give us a like, share it with your friends and family, and without further ado, let's dive in. As I mentioned earlier, NVIDIA is at $138, which is very close to its all-time high. Before we jump into the technical analysis, here are a couple things about the upcoming earnings that you should keep in mind. For the upcoming earnings, which is about 1 month from the time of this recording, so I'm recording on 10/19, the earnings is on 11/20, so about 4 weeks to earnings. We have about 31 up revisions on the EPS, and the revenue estimate is about to be $32.92 billion, and EPS would be about 0.74. NVIDIA has a history of beating its revenue, and most of the times they have done a beat, where over here they have been above 1 billion plus in beat. Now we do expect that they will also have a beat in third quarter as well. On top of it, I think we will also get to hear more updates on the Blackwell and the next generation chips that will be beyond Blackwell. Now keep in mind, NVIDIA is also working with Foxconn to open a factory in Mexico that helps to diversify the supply chain so that not all risks are with Taiwan. Wall Street continues to have a buy rating on NVIDIA. We have about 48 strong buy and 10 buy with only 4 hold. That is overwhelmingly positive for this stock. We had some reiterations on the buy rating on October 18th. BofA did a buy. They moved their price target from 165 to 190, and Goldman did a reiteration again to buy. They moved it from 135 to 150. The average price target right now is about $149.86. So let's say about $150. You're looking at about 8 to 9% upside potential from here onwards. And if you look at a couple of other price targets, you may see anywhere between 8 to 15% upside potential. Price targets are a guideline that you should use for your investing. It doesn't mean that that's exactly what's going to happen. But I always look at price target versus actual price, and you will always notice for most of the stocks, the price targets are generally higher and the stock underperforms those price targets. Look at the price target versus actual price here. Most of the times, the stock has been very close to the price target and on multiple occasions here. And right now, the price target and the actual price of the stock is very close. So considering the performance of NVIDIA, I don't see that to be changing anytime soon unless something major happens like a geopolitical situation. But considering their Blackwell chips are in high demand, they are working on the next generation chips, and AI revolution is really aiding towards NVIDIA's growth. This is the daily chart for NVIDIA, and you can see the continuous rise of NVIDIA from the last couple years. We did have this gap up over here, which was back in 2023, and it has never been filled yet. You know, as they say, some gaps never get filled. Before I show you the technical analysis, here are a couple things that we should look into first. Number one, look at the moving averages right now. We have all the moving averages, whether it's a 20 SMA, 50 SMA, or 200 SMA, they are all trending upwards. RSI is very close to 70, but that is not a cause of concern because NVIDIA has a habit of staying in the overbought territory for a long time. Here's the first example. On 523, they went overbought and they stayed in the overbought until 620. So almost a month. Another example here. They went into the overbought territory on January 10th, and they stayed in the overbought territory until middle of February. So almost a month here as well. They came back again in overbought after that short dip on end of February. They stayed in the overbought for almost like 2 weeks or so. Another example is here. So you can find countless examples, especially in the most recent years, that NVIDIA stocks remains in the overbought territory for a long term. The volume has started to stabilize a lot after a couple of spikes here and there. A couple news came out about Blackwell delay with Amazon, and that's why we saw this little spike here. But overall, there's a healthy volume of 271 million. On average, stocks are traded for NVIDIA. The top resistance for NVIDIA right now is 139 and 79. NVIDIA hit this on 620 after this massive run up, but it got rejected at this level. And then they tried it again, but they got rejected, and then we had a small downturn all the way going down to this $92, which was actually a very good place to buy NVIDIA. After this major sell-off right here around the 9.6, we saw a good trend upwards, and now the stock is making higher highs. They came and hit this resistance again during the intraday on 10.14. We then saw a major sell-off. Then they hit this trend line again. They tried to break out. You saw this little wick popping out from here. This was on 10.17, and then on 10.18, which was Friday, they were still in the same range as well. So what I have done is we draw this trend line right here, and we have this neckline right over here at 92. So this is the range where most of the action is happening. And even on the volume shelf, you can see the volume at the level of 131 is about 1.9 billion. Then we jump on to 2.29 billion. Then we have 2.7. Then we have 2.9 again. And then over here where the majority of the volume is sitting is at 3.19 billion, and this is the level of 116.95. So most of the action is happening between 116 and about 130. This is the bulk of the trading section. Also, in the last few trading days, we are finding that the stock has been able to bounce off, at least in the couple days, from this level of 131. So seems like 131 has become a new support level for the stock. What we want really to happen is, if we want this to break, it will probably come test support here, come back here, maybe get rejected again, come back down here, come back here, come back here, and then most likely do a breakout. This is what the breakout trade might look like, and this is what we are hoping for as well. This can only be achieved when there is some sort of a catalyst. So as we talked about, you have a catalyst for the election coming up. Why election? Because once the election is complete, we have a winner. Regardless of who wins, the market will know exactly what policies will be implemented based on the candidate. Now, this is what the ideal breakout will look like. However, we may get one major news that is going to push NVIDIA out of this resistance level, and it can make a newer high. Now, let me walk you through each trade idea. The first trade idea will be, of course, option selling, because that's what this channel is all about. So the first trade that we are going to take a look at is, we can look at 3 or 4 weeks depending upon your appetite. I am looking at $130, not 131, because, and let me show you why. At 125, at 130, you always have a major volume shelf, because it's a psychologically whole number, and that does help. So look at 130, it's 25,900. At 125 is 33,600. At 120, it's 40,000. So as you can see, at every $5 interval, there is a big volume that sits there. So if we are looking at 3 weeks from now, expiration 15 November, I would like to see opening $130 put. That is right around the 30 delta, and I like the 30 delta a lot, because if we go below 20 delta, the premium is not there. So the optimal premium and the risk that I have found works for me, in my case, is around 30 delta. That might be different for you, so keep that in mind. If you are much more conservative from a risk standpoint, you should look at more on the 20 delta, which would come around 124 or maybe 125. So if you're looking at a 15th November 130 put, you will get about 368 or so, and that gives you about 2.8% for the next 3 weeks. Or we can go and look at November 22, because remember the earnings is on 11/20 and 130 will give you almost $6. So that would be 4.61% in 1 month or so from the time of this recording. And the reason 130 sounds like a good idea is because right at the 130 level, you have a good volume shelf. When we sell options, this does not mean that the stock will not fall below it, but from the current stock price, 230, you have about a 6% downside protection, and on top of it you are going to get $6 on 130, which lowers your cost basis to 124, which basically 10% downside protection that you have on this trade. So I love this trade. I actually have already opened this trade for on Friday, and this is the first trade idea that I wanted to share with you. The second trade idea is going to be a much more defined trade. So if you are a small account and you do not have enough cash to sell options, this trade might be an idea for you. So for example, we will try the same expiration November 22, because the IVs are high, premiums are high as well. In this case, we are going to open a put credit spread, which means that we are hoping the stock will not go below that level and stock will continue to rise. That is what we are hoping, because it is going to have a breakout moment in couple days, or at least closer to the earnings season. In this case, the idea is you will sell a put, and you will sell a put at 130, for which we will get $6 credit. But we have to source this because we do not have $13,000 to put against it. So what we are going to do is we are going to then buy a put, which is going to be 5 levels below. You can buy a 125 put for 450. So basically you're sourcing, you get $600 for selling a put, but to buy a put you have to pay 450. Your balance is $150. You'll keep it in profit. So on a trade for 500 collateral dollars, you are basically keeping 150 up front. This is going to be your max profit. Your max loss will be 332. This is how the trade will look like. You will have to put $500 as collateral. Your estimated minimum credit is 167, and basically you're getting 6 and you're getting 450 to pay it out. So this is the second trade idea for a smaller account. For the third trade idea, which is a breakout trade, the conditions have not met yet. So we cannot take that trade yet. The trade will be buying a call option, which helps us to leverage, put less money up front, and take advantage of the upswing that we will get in the next 4 weeks or so. And of course, there are other trades that we can look at, opening iron condors or butterfly, to protect ourselves on both sides if we see a major decline because of poor earnings. But for now, I'm looking at bullish trades. So this is the reason. So for this breakout trade, the conditions have to be the following. Our first condition is that the candlestick should come out and break this resistance. Then we need to make sure that this trend is not a false breakout. So we would want to confirm this with at least 1 or 2 strong candles that are above this support level, and they come back and test this new support level that will be formed right above this resistance. This is a good example. We saw this one breakout candle here. This one was not, but we wanted to see this test. So you would not get into this trade until you see a retest over here and then continuation stare upwards. So in that scenario, I'm going to be looking at opening a $130 call after that. And of course, the price will be much higher because at currently the delta is 67. So in that scenario, the delta would be closer to 75 or 80. This is where I'm looking to open my first call. So let's take a look. If around the 75 delta today, if you buy for November 22, it will be 124. Right now, you will pay closer to $1,900 for this call option. As you can see, there are 3 different ways you can play this. One, with a much larger capital for opening options. Second, if you are a very smaller account, you can risk up to $500 and get $150. Or you can be somewhere in the middle where you have about $2,000 to buy a call option around the 130 mark and then play for that breakout trade. So make sure you follow me on X and subscribe to the channel, because I will post an update once I take that trade, and you can take advantage of these trades as well. But do your own due diligence, do your analysis. In the comment section, let me know what do you think about the trade ideas. Does it make any sense to you? If not, why not? Let me know in the comments. If you enjoyed today's video, make sure to give us a like, click on subscribe, and ring the bell notification. I will see you next time, investor family, but don't forget to invest for tomorrow.